Hey, how's it going? The best stock market performers in Congress. I'm going to talk about that, but also we're going to review the most popular stocks in Congress. If you're watching this video, you're probably interested in the investing world and all things stock market related. And I'm positive your girlfriend or wife is sick and tired of you talking about Texas Roadhouse, Realty Income, and SCHD. In fact, she texted me the other day. She's annoyed by you, but that doesn't bother you. If this fits your description, you probably look up to super investors like Bill Ackman or Warren Buffett. On the other hand, other people look up to Taylor Swift, quite literally because she's like 6 feet tall and you're only what, barely 5'7"? And you know I'm being generous because you're realistically 5'6", but with shoes on, we'll give you 5'7", you little shorty. On that note, don't tell me to use a paper straw or to reuse my dirty tampons when Taylor's private jet 20-minute flights single-handedly creates more pollution and offsets an entire village's effort to reduce and reuse. I digress. Then there's those that study and analyze the members of Congress and their stock market trades. Doesn't matter what your political beliefs are. It's no secret that members of Congress are some of the best investors in the stock market. Isn't that wild? Sometimes our public servants be making the most gains. The politicians have an understanding and pulse check of how certain U.S. industries are doing because of the nature of their work. Our politicians sit on committees to help focus their attention on certain aspects of our society and to push change in those sectors, such as the Committee on Energy and Natural Resources, Committee on Research and Technology, or even the Committee on Banking, Housing, and Urban Affairs. Some people believe that this knowledge allows them to make quote-unquote educated and best guess moves before everyone else. And fun fact, at one point, I was a political science major in college, and then I quickly learned I was not about that life. By the way, did you know in 2023, Congress passed 27 bills? And strangely enough, there seems to always be a pending government shutdown happening. Because they don't mind if the average American suffers. You gotta love what's happening up on the hill. So how did Congress perform as a whole in 2023? Of the 100 members that reported their transactions, 33% beat the S&P 500 with their portfolios. So the yellow or gold colored bar that you see on your screen represents SPY, which is an index fund for the S&P 500, which is also referred to as the market. So every congressperson that's below that yellow line means they underperformed the market. Everyone above beat it. And don't worry, we'll go deeper here in a second. I hope you know how to swim because you're too big for me to carry. Good sir. The Democrats had a 31% rate of return, and the Republicans had 18%, rounding up. And that's because the Republicans invested heavily into banking and oil. The Democrats, on the other hand, bought big tech like Apple and Microsoft. For reference, the S&P 500, their rate of return last year was around 25%. If you sat out on the sidelines last year with your cash because people were screaming about fear and doom, and I'm sorry, but I get it. Screaming about scary things will get the clicks and the views. Just like if you visit your in-laws' house, if they're glued to their TV watching Fox News, again, I'm sorry. On the topic of Congress and politicians, have you ever met someone so unpleasant that all they wanted to do was talk about politics? Like that's their whole life and personality. I am certain every single one of us watching this video knows that type of person. And to be honest, things get really awkward. So my go-to move is to release a silent fart without them hearing it and to let them bask in my filth. If I'm going to suffer hearing you go on a rant about how the billionaires need more tax breaks, then you need to breathe my Indian curry meal that I ate at 2 p.m. Okay, before I offend some people, let's answer the question. What were the most popular stocks in 2023? Here are the top 10 stocks based on the total transaction amounts associated to them. First, we're going to be looking at the House of Representatives. ConocoPhillips was number 1. If you're bullish about the oil and gas industry, most of these companies are pretty cheap right now. Whether or not you like the industry, one thing I heard is if you work at an oil corporate job, it's pretty smooth. Low stress, low hours, but high pay. Apple was number 2 at $2.3 million worth. I just don't know if there's ever a bad time to buy Apple. My rule of thumb has been to buy the dips because Apple seems to always find a way to go up and up, just like Viagra. Today's video no, I'm kidding. I'm sorry. That wasn't funny. Number 3 is Tyson's Food at $2 million. Number 4 is Microsoft, and then Google, NGL Energy, Bayer Pharmaceutical, CVS, Arista Network, and Fidelity National Information Services. Nothing too crazy here, but shout out to the ones who invested into Tyson Foods. That company is going through it right now. Like that one time you almost threw everything away to join the Marines because your ex-girlfriend told you she wanted y'all's kids to have your eyes, and then 2 months later she ended up cheating on you, so y'all broke up. Okay, that was way too oddly specific. And if you pause this video to look up Tyson Foods, I'm so sorry, I was laughing so I had to gather myself up. Let me save you the trouble. It ain't worth it. Like that one time your buddies tried to convince you that she was bad news, but you disregarded logic and then you got your heart shattered. Some of us have to learn the hard way. Some of us need to get our balls kicked hard to learn why it's not fun to trade in speculative, risky stocks or companies that are just failing. And now the Senate. Which stocks were popular among the senators? Number 1 was Admiral Acquisition. You're probably thinking to yourself, what? And I agree with you. I've never heard of this company either. So apparently when I looked them up, their website says this: Admiral has been formed to undertake an acquisition, which may be in the form of a merger, capital stock exchange, asset acquisition, stock purchase, scheme of arrangement, reorganization, or similar business combination of a target company or business. In other words, this kind of reminds me of a future SPAC. Then number 2 was PayPal at $1 million, and honestly, PayPal is an interesting story. And their fall from grace is actually sad to see. If they pay a dividend, I'm sure they could attract more investors. But as of right now, if you're investing into PayPal, you're banking hard on a recovery story like when Steve-O became sober. And guess what? Steve-O has been clean for 15 years now. Number 3 is Cleveland Cliffs. Number 4 is Qualcomm. Say what you want, but their chips are still really amazing. I respect what Apple is doing, but the Qualcomm Snapdragon chips slaps big booties. And number 5 at $500,000, Clorox. They're trying to pivot into being a lifestyle company according to their investor relations and earnings calls. And investors are eating it up. I bet you didn't know that Hidden Valley Ranch is under the Clorox portfolio, alongside Burt's Bees lip balms. By the way, your lips are pretty chapped, so you should probably try to moisturize them. With that said, I like Clorox. I don't like their valuation though. And number 6 is Liberty Media, aka the monetizable business of Formula One driving. They handle all of the advertising and commercializing of the sport. And speaking of that, I don't get the appeal. Isn't Formula One just like NASCAR racing? I know somewhere in Europe I just made someone spit out their cup of tea in anger, but I'm not into driving sports. And then we have Texas Instruments, Ford Motors, Kimberly-Clark, which makes paper-based products like toilet paper and feminine sanitary products. And then lastly, Louisiana Pacific. Never heard of this company, but I found out they make wood products like OSB panels and other home building essentials. Which members of Congress were the best performers? Brian Higgins, what you see on your left, had a 238% rate of return. But that's because Brian Higgins' portfolio only has NVIDIA. And here's the funny thing. He bought it back in 2021 and he has held that position since. Buy and hold is the way to go with winning companies. And oddly enough, he is no longer in Congress. He's out. Next up, we have Mark Green. He polled 122% with mostly energy and oil-related companies. And then there's Garrett Graves, who did 107% with a small portfolio of only Amazon, Airbnb, and Coinbase. And lastly, David Reuser, who had a 105% rate of return with NVIDIA. And fun fact about Mr. Reuser, he sold Main Street Capital and Altria. What a terrible monster. I say we boo that man. Boo. And by the way, I don't know if it's just me, but why do they look like church deacons? The top performer is no longer in office, and it seems like the best performers got lucky with a few investments, i.e. Nvidia. They invested here and there over the years, but not many transactions. So naturally, I got curious and I wanted to find out how the more famous members of Congress performed, the ones that are consistently in the top 10 best performers category. Number 1, front and center, is Nancy Pelosi with a 65% rate of return. And then we had Dan Crenshaw at 38%, Susan Collins with 55%, and your favorite citizen, Mitch McConnell, at 18%. Besides Mitch, the other three have historically beat the S&P 500. But then if you're anything like me, you're probably asking your wife's boyfriend the question, who were the worst performers of Congress? The absolute worst was actually Warren Davidson with a negative 77% return because of a meme stock known as Workhorse. Warren bought it back in 2021, and he has held the position in his portfolio since. He's not very active as a trader, as he hasn't made a transaction in 3 years, and I'm guessing that experience of investing in a meme stock made him disinterested in the stock market. Then there's Austin Scott, who posted a negative 56% rate of return, and his portfolio has a lot of renewable energy and EV types of companies, which explains the results. That industry as a whole just got really beat up last year. And lastly, the senator from Vermont, Bernie Sanders. No, I'm just kidding. Peter Welch had a negative 16% rate of return. So what do you think? Is it a good strategy to follow these politicians and their investment moves? Or do you think some of them just got lucky? Me personally, I think I will take into consideration what the biggest names in Congress are doing and their moves into positions, but I will not just blindly follow them into the dark. To prove my point, negative 77%, negative 56%. Some of us will deny there is any insider trading happening, yet the perfectly timed transactions will say otherwise. On the other hand, judging by how a majority of the Congress folk underperformed the S&P 500, I'm just going to stick to my investing strategy. You should watch my video on why I invest in high-quality dividend companies that meet or exceed certain expectations. Alright, Jimmy, it's about that time. Good morning, good afternoon, and good night. Talk to you next time. Stay safe.